Well, hello there. Welcome to WTF Mortgage. Appreciate you stopping by. This is the mortgage interest rate update for the week of March 25th, 2024. Let's jump into it with some real talk. The mortgage and housing industry was red hot during COVID, and as a result, many homeowners paid premium prices for their houses. And along with those premium prices came some pretty fat sized loan amounts. And along with those fat sized loan amounts came interest rates of like 6.875, 7%, 7.5%, and even higher. I want to let you know that you do not need to drop your interest rate down a full percent in order to save money. That's just a bunch of old garbage that's been around for years, and unfortunately, it's propagated by people who have no business giving out mortgage advice, like famous radio talk show host. If you had a $500,000 loan and a 6.875 interest rate, and you drop that 6.875 interest rate down to 6.375, did you know that saves a little over $200 a month in interest? That's like $2,500 a year for the first 5 years. That's crazy. And you can do so with paying little or no closing fees. Now, you need to keep your eye on what the mortgage interest rate market is doing, because pricing has been dropping down as predicted a year ago since December. And the good deals are going to come and go and come and go as the pricing continues to drop down. And you're not going to see interest rates of like 3 and 4% anytime soon. So you got to grab what you can while it's hot. So let's get into the interest rates right now. All right, party people and mortgage rate shoppers. These are the interest rates from my company. When you learn how the interest rates at my company work, you will know how the interest rates at every company work. These are the rates, as you can see, from the week of March 4th. And these are the rates, of course, from this week. Let's talk about the rate and APR relationship. A quick refresher. These are the advertised rates right here, or note rates. And these are the APRs. The APR indicates fees associated with this advertised rate. When the rate and APR are the same, that indicates there are no fees associated with this advertised rate. And when the APR is higher than the advertised rate, that indicates there are fees associated with this advertised rate. The higher the APR is above the advertised rate indicates more and more fees associated with that rate. So how do you use this? When you are shopping at one place and they're showing a 5.75 interest rate and they have an APR of 6.129, and then you go to another company and they have that same 5.75 interest rate, but their APR is say like 6.375, that means they have more fees associated with their advertised rate. In other words, they are charging more. Now check this out. The week of March 4th, this 5.75 interest rate had an APR of 6.141, as you can see. Now, this week, that same 5.75 interest rate has an APR of 6.129. Doesn't seem like much, does it? That little bit of a difference. That little bit of a difference reflects $2,000 lower in fees. Yes, just from 6.141 down to 6.129. That's about a $2,000 drop in fees. That's why it's important to learn and be cognizant of the rate and APR relationship. And they don't all move together. Like, this is my 6.75 rate. My 6.75 rate has an APR of 6.857 this week. Check this out. That same rate, 6.75, back on the week of March 4th, had an APR of 6.850. So my fees actually went up a tiny bit for the 6.75 rate. Pretty trippy, huh? And then, as you can see, these are two rates down here. These were the rates with no fees. How do you know that? Well, the rate and APR are the same. Same thing with the week of March 4th. The rate and APR are the same. The difference is that you're getting a larger lender credit this week. Now, that's not reflected in the APR. You'll just see the rate and APR are the same, indicating no fees, but you won't be able to tell the lender credit associated with it. So this rate right here, for example, this 7.25 compared to this 7.25 actually has a lender credit of about $2,000 or so going to the customer. All right, let's finish up with talking about disclosures. Disclosures are very important. The disclosures, or disclaimers as some lenders call them, let you know what these interest rates are based on. For example, the credit score, the loan amount, the value. This is really important because if your scenario does not match what's in the disclosures, your pricing is going to vary. Alrighty, folks, this concludes the mortgage interest rate update for the week of March 25th, 2024. Drop any questions in the comments, and I will see you on the next one. Happy shopping.